You survived bankruptcy. Now the real work begins. Here's your comeback plan. Because bankruptcy isn't the end of your financial story. In many ways, it's the reset button most people never dare to press. And if you're wondering how to rebuild your credit, how to get approved for loans again, and how to move forward without repeating the same mistakes, you're exactly where you need to be. Before we start, if you're rebuilding credit, comment the date you filed, and let's track your comeback together. Most people imagine bankruptcy as a financial death sentence, but the truth is the opposite. Bankruptcy wipes out your old debt, legally protects you from collectors, and gives you a fresh baseline to rebuild from. Yes, your credit score drops. Yes, lenders will see it for up to 10 years. But what matters now is what you do next, because the next 12 to 24 months can redefine your entire financial future. The first shift happens in your mindset. Bankruptcy didn't make you irresponsible. It made you human. Medical bills, job loss, divorce, inflation, these things break people long before poor spending habits ever do. So instead of feeling ashamed, treat bankruptcy like a business decision. A company would restructure, cut losses, and start over. That's exactly what you're doing. And now that you've cleared the past, you have a chance to build a stronger financial structure than before. Your first move is stabilizing your cash flow. Bankruptcy removes old obligations, but it doesn't automatically fix your money habits. Start with a realistic spending plan, not some restrictive budget you'll quit in 2 weeks. Focus on the big three: housing, transportation, and food. If you control these, everything else becomes manageable. Track your spending for 30 days, automate essentials, and create a small financial cushion. Even $25 a week set aside is progress. The goal isn't perfection, it's control. Next, it's time to rebuild your credit. And here's something people don't realize. After bankruptcy, it is actually easier to improve your score than before. Why? Because your debt-to-income ratio resets, your balances are low, and your credit file is clean. The scoring system rewards stability, not perfection. So here's your step-by-step plan. Start with a secured credit card. This is your comeback tool. You put down a deposit, usually $200 to $500, and that deposit becomes your limit. Use it only for small purchases you already budget for, like gas or groceries. Then pay it off in full every single month. This creates a perfect payment history, which is the single biggest factor in your credit score. 1 year of on-time payments is enough to take you from damaged to fair, and in many cases, even into the low-good range. After your secured card reports for 6 months, consider adding a credit builder loan. These loans work differently. You don't receive the money up front. Instead, your monthly payments are held in a locked savings account, and when the loan ends, the money is released back to you. It's like forced savings with credit benefits. This adds installment credit to your file, an important mix that boosts your score. That be why month 9 to 12, you'll have 2 active lines of credit reporting. This is the foundation lenders want to see. If you repeat this pattern consistently for 1 year, your score can climb by 80 to 200 points depending on where you started. That's how powerful consistent financial behavior is after bankruptcy. Now let's talk about one of the biggest questions people have. How long until I can get a loan again? The answer is sooner than you think. For auto loans, some lenders approve people as early as 30 to 60 days after discharge. Your interest rate will be higher at first, but it gets better as your score improves. For credit cards, unsecured offers typically start showing up around the 1-year mark, but be selective. Only choose cards with no annual fee and from reputable banks. For mortgages, FHA loans allow approvals just 2 years after a Chapter 7 bankruptcy and even 1 year after Chapter 13 payments, if you've made consistent progress. Bankruptcy feels like a 10-year sentence on paper, but in reality, lenders care more about the last 24 months of your financial behavior than what happened long ago. The next part of recovery is building your emergency fund. Bankruptcy removes debt, but without a safety net, you'll end up relying on credit again, and that's the cycle you want to avoid. Don't try to build 6 months of savings right away. Just aim for 4 milestones. Your first $100, then $500, then $1,000, then 1 month of expenses. Small wins build confidence, and confidence builds momentum. Put your savings in a high-yield savings account where it earns interest automatically and stays separate from your daily spending. As you rebuild, be extremely careful about new debt. A lender offering you a credit card is not giving you freedom. They're testing you. Only borrow what you can pay off immediately. Keep your credit utilization under 10%. If you ever feel tempted to overspend, switch to the debit card method temporarily. Your goal isn't to avoid credit. It's to prove that you can manage it without depending on it. Another big part of recovering after bankruptcy is monitoring your credit reports. Mistakes are common. Sometimes accounts discharged in bankruptcy still appear as active. Sometimes a balance shows up even though it should be zero. Pull your reports from all three bureaus, Experian, TransUnion, and Equifax, at least twice a year. If something is wrong, file a dispute with documentation. A clean, accurate credit report is one of the fastest ways to boost your score without doing anything extra. And now for the mindset part people often ignore. Rebuilding your financial life requires habits, not motivation. Motivation fades. Habits stay. Automate payments. Automate savings. Set reminders. Use apps that categorize your spending. Design your system so you can't fail. When life gets busy, your automated plan keeps working in the background. That's how wealthy people stay consistent. Bankruptcy is not your identity. It's a chapter, not the whole book. The people who rebuild the fastest are the ones who treat their financial recovery like training for a marathon. They pace themselves. They track small wins. And they celebrate progress. In 12 months, you can transform your credit. In 24 months, you can become loan ready. In 5 years, you can qualify for a mortgage. And in 10 years, the bankruptcy disappears from your record entirely. But long before that, you'll already be in a stronger position than you've ever been. So if you're watching this right now, understand this. You don't need to be perfect. You just need to be consistent. One step at a time. One payment at a time. 1 month at a time. Your comeback isn't just possible. It's already in motion. If this video helped you, make sure to subscribe for more financial rebuild strategies. And if you're rebuilding your credit, comment the date you filed and let's track your progress together. Your financial comeback story starts today.